I'm Tony Sycamore, Senior Market Analyst at IG Australia. US equity markets finished last week on a high note, locking in a 16th week of gains out of a possible 18 for the first time since 1971. The gains last week came despite a robust core PCE print, with markets, as expected, choosing to look through the number, partly based on the view that the rise was driven by one-time New Year price increases. Additionally, in the lead up to last week's core PCE release, expectations of Fed rate cuts in 2024 had repriced significantly lower. In early January, there were almost 725 basis points Fed rate cuts in the market, and that has been stripped back to approximately 3 rate cuts in 2024, which is in line with Fed projections. Providing further insights this week into the state of the economy and the timing around potential rate cuts, speeches by several Fed members, including Fed Chair Powell, as well as labour market updates, including the non-farm payrolls report on Friday night. Let's take a look at the chart of the S&P 500 and the Nasdaq to see how they look as we start the new week. Okay, this is the chart of the S&P 500 cash. And as we can see, the rally from the October low has continued to extend after a little bit of consolidation in here ahead of NVIDIA's earnings report. But once that report delivered and exceeded expectations, the S&P 500 has pushed to new highs. It is despite the fact that we're continuing to see RSI divergence. And when you look at the weekly charts, it is well and truly overbought. So where does that leave us? Well, I think while the S&P 500 remains above this uptrend support on a daily basis, which is coming in around 50-50-ish, which lines up with this high over here at around 50-48 and some lows through here coming in around 50-40-ish, 50-50-ish, then I think you have to give the uptrend room to explore higher prices, potentially up towards 5,200, 5,250-ish. Now, if we were to see a break below this trendline support, and down below this horizontal support, 50-50-ish, 50-40-ish, to give it a little bit of room, then that would probably give you an indication that the S&P was making a move, at least initially, towards 4,900, which is this area here, much below 4,900. Well, of course, that would open up this 47.93 high that we saw here in late December. But until then, allow the S&P to continue higher. For the Nasdaq, the story is vaguely similar in terms of the fact that we have seen a strong rise from the October lows. It's actually about 30% from the October lows, 30% higher. Now, what you can see here is this consolidation ahead of the NVIDIA's earnings report. This is the NVIDIA earning report reaction here. And of course, it led to the Nasdaq finishing at all-time highs on Friday. Now, where does the Nasdaq go from here? Well, you have to give it the opportunity to continue higher. And that, for me, remains the case initially while it's above 18,000-ish, which is these highs here. This was obviously the post-NVIDIA earnings reaction and the pre-NVIDIA earnings reaction. This comes in around 18,000. And, of course, if we were to break below this horizontal support, which comes in around 17,000, 17,200-ish, then you're probably looking for a deeper pullback. But until that occurs, it is a good time to allow this move to continue. It has been a strong move. This move's gone a lot further than I think most people expected. I thought we'd probably get up to about here. That wasn't a surprise as such, but this last, 3 to 4% has certainly been caused me to, give it a little bit more of a viewing in terms of this does have further upside. And we need to be aware that as the facts change, then so does our view needs to change. As long as we're keeping in mind where we're wrong or where the market might signal that it is undertaking a pullback. Thank you for listening and have a good week ahead.